Good afternoon, everybody. I have 20 minutes, right?
Yeah, you got 20.
So we'll try to keep it
And I'll be right
short
back.
and sweet. Thanks for being here. So I'm Jeff Lewis. I'm Director of Capital Formation. That's me. So you can see I am indeed me. You don't have to worry about that. The firm was founded in 2003 by Dan Moorhead. Dan was at Tiger Management, where he was the CFO and the head of Global Macro. He created Pantera as a macro fund, and in 2013, he saw the light and had this moment of inspiration that the best trade that he could see in the world was Bitcoin. And so we created the first hedge funds and venture funds in the United States in 2013 with the first Bitcoin fund, and 2014 with the first venture fund. If you look at how Pantera has evolved, when you start trading what is essentially like a stock market, when there's one stock, and then there's 10,000, and you've been there for the entire time, we're in a relatively, unique position. Most of what we do is venture. So, why now, right? There's a lot of questions, especially with some of the headlines that we've seen recently. So why are so many people still very enthusiastic about this and the technology and what it might offer? So you hear a lot of times people talk about the concept of Web3. What is Web3, right? So basically, the first version of the internet was read. The second version of the internet was read and write. And then the third version of the internet is read, write, and own. Right? That's what distinguishes Web3 from Web2. And most of the things that are being created that are exciting to people and sort of capture the mind are basically in this Web3 idea. So we look at this time and we sort of feel like, frankly, we have probably more gray-haired people than most crypto firms have. I don't have a pink t-shirt and purple hair, so I apologize. But I have the jacket.
Oh, we love the jacket.
I have the jacket.
I got the purple jacket. So.
But we actually have been around long enough to remember some of these other cycles. And if you go back and look at 20 years ago, 2001 to 2002, the NASDAQ goes from 5,000 to 1,000. And it's the time of the dot-com bubble. It's the time of pets.com, which, by the way, was started by anybody? Jeff Bezos. So not everybody blows something up, doesn't go on to actually do something better. But basically, if you go back to that period of time, what was the imbalance? The problem was we could imagine a lot of things that the internet might do for us, but the internet was kind of terrible. Like, it looks like there's some people who had a computer in the year 2000. And like, if you tried to watch a video or you tried to buy something, it didn't really work very well. So, what kind of took the air out of that bubble and sort of caused that crash was this, the market just wasn't really built. And, just before that crash was kind of when you had the crash in the infrastructure companies, Global Crossing, Frontier, all these companies that basically created all the infrastructure, right? And the infrastructure builders ended up kind of getting blown out, losing all their money. But at the end of it, they put basically the road down, and then the work was done from 2002 through 2006, 2007 to actually make the system robust and give it the capability to actually host some of the things that we can imagine. So you see, when do things actually happen? The first movie is streamed on Netflix in 2007. The iPhone comes out in 2007. So these things don't happen immediately, right? But if you look at venture returns, you can see I'm covering them up. So hold on. You can see that during that 99 to 02 period, it was pretty rough. Right? If you were in vintages in tech in those years, you basically were sort of happy that you got your money back. But you could see that as you come out of that, and now we're in this infrastructure time, 03, 04, 05, 06, venture returns get quite a bit better in tech. And that's because basically the work is being done that will enable Airbnb and the iPhone and Netflix and YouTube to sort of take over the world. So we really do think that we are in a very analogous time. And where we are with blockchain is we're still imagining a lot of things that the systems are not capable of delivering. We have a lot of issues. We have issues with scalability, we have issues with speed, we have issues with security. We have a lot to fix. But at the same time, we can see the road and we can see the things that we're going to build, and they're going to be incredibly impactful. And just like Web 2 did, Web 3 will both improve things that we already had, and it will create things that we never imagined that we would actually want, right? So, there wasn't really an analogy for Airbnb, right? It didn't really exist. So that's like brand new, right? But obviously, like Uber just improved the taxi business, right? So it was an improver. So you're going to have things that come up that are absolutely brand new, and you're going to have things that come up that are just evolution. So, when you look at the kinds of things that are going on, it's always funny to me. People will be like, I don't get NFTs. Like, why would anybody want one of those, right? And so what is an NFT? It is a digital representation of a piece of art that comes along with a certificate of authenticity. The certificate of authenticity is actually what the NFT is. So the question is, why would anybody want to experience art that is not physically there? And I always say, well, what if it was 100 years ago and somebody came to you and said, I have this really good idea. We're gonna film people that are doing plays so that people can see them who aren't actually at the play, like, because they might want to see the play, and without having to go to the theater or be in a city that has one, right? Well, it turns out that the movie thing kind of worked out, right? Sometimes when these evolutions take place, it's easy to dismiss them, but you can't really dismiss the impact. If you look at what has happened from a price perspective, we've had these kinds of downturns in crypto before. This is kind of like, they call them crypto winters, and I hate the phrase, but we've had them several times. And there's really some very important distinguishing factors about this particular one from the others. In the other cases, there were genuine questions about whether the technology could work, whether it could be adopted, whether there was any place for it in the world. All of the volatility that we have had, except for one event in 2022, was about old world stuff. It was about centralized organizations. It was about having nothing to do with whether the technology or whether these organizations, the decentralized organizations, are effective. It was all about old school people doing old school things in the wrong way, in the way that they've done them for a long time. So you get this damage to the market that is not really the result of anything to do with the market itself. And you can see these are some of the adoptions. These are some of the kinds of names that just last year, started to get involved in the marketplace. These are not tiny companies. These are the largest companies in the world that are definitely, believing that this is going to be super duper important. So I'll sort of finish up with kind of like basically, why does crypto make sense in a broader portfolio? And basically, over time, crypto has had a tendency to be relatively uncorrelated. We went through a period last year of sort of increased correlation. It's very common, though, as everybody knows, in markets, when markets are under stress, for them to kind of lump together. Like, even like inside of an equity market, you'll see all of a sudden it commoditizes and everything trades together. And then as the thing gets more healthy, everything starts to break apart and move on its own. And we're already seeing crypto sort of decouple. And the fact of the matter is, the really difficult thing for most people to appreciate is crypto is essentially emerging market investing. Think of when people tell you, like, I'm getting into crypto, imagine that it's like 1990 and they're getting into El Salvador. Okay? It's really like it's this own little world. It's set off on its own. It has a totally different culture. It has totally different rules, written and unwritten. And you really, if you're going to go into these places, there's a couple of things you got to realize. First, you need to go in with somebody who knows the place, who knows which streets you go down and which ones you don't, which people you do business with, which people you don't. And also, you have to go in and basically understand that, like, there aren't that many things to buy. When you go into El Salvador, there's like, okay, what is it? There's the railroad, there's the newspaper, there's the bank. It's not like you can diversify that much, right? And one of the things that is, I think people have struggled with respect to diversification is, Bitcoin and Ethereum are 60% of the market. Bitcoin and Ethereum are two very specific use cases. There's going to be a lot more stuff. And so the pitch for Pantera is, I think most people make a mistake in crypto, which is they don't diversify enough, because you can't diversify enough if you're only in liquid tokens. There are only a few use cases that have any liquidity, that have significant size. And if you're going to try to create a diversified portfolio to basically take advantage of this big change that's taking place with Web3. The only way to do it is in venture. The only way to do it is go back to the earlier stage and basically be with a manager like Pantera or some of our peers, where you can get access to 30, 40, 50 names that are literally in 10 different use cases, in different stages, looking at them from different sides. It's the only way to sort of really hedge your bets. Because at the end of the day, the liquid stuff is kind of going to be pretty commoditized because there just aren't that many different takes. It's not really a diversified market that for all the number of tokens that there are, the number that are really large and the number that are really liquid is relatively small, and they kind of do a limited number of things. So that would be the end of my.
Do you have any details on the venture fund?
So, we're running about $4.25 billion right now. We have hedge funds that are evergreen that do liquid tokens, and then we have venture funds that we do periodically. Our next venture fund will probably be launched in either the second or third quarter of this year. I think this is going to be a superb. I think we and all of our competitors will end up looking at like 23, 24 vintages and thinking those were the good old days. Because what just happened with FTX was that this wall of money that was literally about to come into our market is now going to wait. If you go back to 12 months ago, it was, the scene when in LA, they had the backup with the supply chain. There were all those super tankers just sitting out there in the harbor waiting to come in and unload. That was literally like the investment world waiting to come in and put their money into crypto. And what FTX has basically done is put a stop to that. So for a couple more years now, there's going to be this nice little opportunity for the world to operate kind of normally. And there's a lot of challenges that come into crypto when it gets too hot. It has a lot of the same things that happen in other markets when too much money starts to chase them. But especially the big problem that we get is we get all these tourists and generalists who kind of come flooding in, and they're like bulls in a china shop. And we're trying to do our thing and pick deals very carefully, and all of a sudden there are guys throwing big checks around, doing it kind of indiscriminately, and those guys have pulled back. So our ability to invest thoughtfully is going to be much better for the next couple of years. And but the opportunity continues. So this is going to be like a great moment for the insiders. How much money do you have in
venture right now, and how big is this fund going to be?
So about 3/4 of our assets are in venture, and the next fund I would imagine will probably be about $1 billion.
About cyclicality, because you made a comparison to emerging markets. So primarily in the early stages, we've started investing in emerging markets. So when one tank, they all will go together.
Right.
And then suddenly life is not too good in those other markets. Let's try, and then they go up. And then it has always been a high volatile market.
Right.
So do you see this market similar since you made the comparison?
Yeah, well, I think part of the reason for the perception of volatility is that there isn't that much diversification. You can't really diversify away from that risk, right? But it's interesting because if you look at like measures of vol in like, if you sort of consider like Bitcoin and Ethereum to be sort of akin to like Tesla or Uber or something, to be like a tech stock, they actually are less volatile than the largest individual tech stocks are, like Bitcoin and Ethereum themselves. Like they actually, I'm a big sort of chartist and stuff, and they just don't stretch as far as individual stock names do. So people perceive volatility because essentially of a whole market that's almost as volatile as like really like one stock.
Is there any correlation? I thought there would be a correlation with gold or inflation. It seems doesn't move like that.
So you ended up with this sort of confluence of events, right? Where you had this kind of, you had the Terra Luna situation, you had the FTX, you had these situations that sort of came up and kind of muddied the waters, right? In the long run, if you think about there's only one thing to use Bitcoin for, okay? It's gold, right? It's a replacement for gold. It's a store of value. That's the only thing to do with it. It will never be money. It's just gold. So if Bitcoin gets adopted over time, if we go from 200 million to 300 million to 500 million to billions of people that have chosen to basically use Bitcoin as a product, what they will be doing is they'll be using it as a storehouse of value.
It
should over time
adopted enough. And
right.
You feel that in the future it will.
Yeah.
Steve?
No, I very much agree with a lot of what you're saying. Particularly, we've co-head our crypto practice here, and we've told a lot of clients wanting to enter the space that the real space to do it is with the professional venture
right.
investors. And that's really how this is going to get funded, and better than selling coins, it should really be done. So, and I have to say there was some level of disappointment, and I wonder what lessons you guys have learned from this, is that you kind of, the big investors, not necessarily Pantera, went on to the bandwagon with FTX and
Well, we didn't.
really didn't act.
Yeah.
Many of the big investors did not act as the adults and say, let's do extra diligence here. Let's not rely on the government to do it. And I think there's a sense of disappointment, and still believe that real venture investors are the right way. But what I think the industry as a whole needs to put in procedures and think about how did the venture investors miss this?
Well, one of the investors that was in FTX put out a statement, I won't call them out by name, where they sort of talked about, well, sometimes you make money and sometimes you lose money. And, we generally make money, so who
Tom
cares?
Brady.
Right, right.
But I think it's a lot deeper
No,
than
but I actually think that was offensive because there's different ways of losing money, right? And if you lose money by picking the wrong market at the wrong time, or you lose money by picking the wrong trade inside of a market, so be it. Nobody's perfect, right? We're going to have those kind of judgments are subjective, and it's sometimes you win and sometimes you lose in that respect. But there are certain kinds of losses that you're not really allowed to take. And this kind of sort of failure of basic diligence is not acceptable. And it's not acceptable, not because of how much it affects your returns or whatever, because it really does call into question what your value add is. It really does call into question whether you're just lucky most of the time that you didn't miss things that were there to be missed.
And I think even particularly in this industry where we're really, if we believe in the decentralization
Yes.
model, which I think has come under question in the last few months, it really is going to fall to the role of the professional investors to act as kind of imaginary nodes of diligence.
Well, there's a very interesting thing that's already starting to happen in the marketplace. And I come from traditional finance, and I run a lot of regulated businesses. I ran a mortgage company. I ran a broker dealer. I understand the way the real world works, right? But at the same time, I understand the aspiration of the people in this market. And the fact is they're now going to come into contact. And what's really cool is that the dysfunction in Washington is so astonishing, right? It's just astonishing that what's going to end up happening is the market's going to fix it. I really believe this. The market is going to end up basically doing the regulation for the regulators because they can't figure it out. So you'll end up with the market like adopting norms for how basically to present what's going on fundamentally inside of a project that's not an equity, right? The market is going to the market's going to solve the stablecoin problem, right? And come up with a way to have as much transparency as possible, as much safety as possible. The market is going to do the work that the regulators don't seem to be able to do. And I really do think that when you look up in 2 or 3 years, part of the reason the next couple of years are going to be so good is because while everybody who's not participating in the system waits for the government to kind of straighten everything out, the market's going to do that work and it'll be straightened out without them.
Any other questions out here? Yeah, I've got a couple.
Yeah, so I just want to clarify what you stated. You said something about it will take 2 years for the FTX negative concepts and ideas that have overhanging this whole market to kind of like
Well, the reason
disappear.
I say 2 years is because I think that what FTX does is it creates a new sort of gating element for somebody to come into the system. And the gating element is that the regulators are on top of it, right? That clearly the regulators weren't on top of it. FTX was a risk because of the fact, by the way, it was highly regulated. But anyway, FTX, says to me, I need to wait for the regulators to be on the job, right? So I'm guessing that it'll take them 2 or 3 years to get their stuff together. Yes.
It's a lot of cronyism.
Yeah.
Alameda Research.
Yeah.
FTX.
Well, it was just fraud. I mean,
The
yeah.
other question that I want to just relate to what we just discussed is that I thought that the SEC, Gensler, would actually do something within that 2-year period that you stated, regulatory.
Well, it's not
reforms.
really, the problem is it's not really for Gensler to do. What we've got is this vacuum, right? Because the Congress is so confused, okay? They don't understand any of this stuff, right? And they're not in any way interested in kind of stepping forward and trying to sort of legislate this. In theory, the way it's supposed to work is they actually make some laws and then the SEC and the CFTC enforce them. The SEC and the CFTC are not supposed to make up the laws. That's somebody else's job, right? And at this point, part of why this is so chaotic is basically what they're doing is they're making it up as they go along.
Other question?
Yeah.
And talking about the laws, and I'm just kind of curious, because we're talking about FTX, everything else. In your opinion, how much the result of the Ripple case kind of affects what you guys are going to do in the future? Your thoughts and opinions on that?
You know, it will obviously create some sort of precedent, and it'll help us to sort of better understand what the rules are. And all anybody in the market wants is to know what the rules are.
Any thoughts on the Silver legal boss litigation?
No.
Dan?
So you mentioned the market basically self-correcting. So what do you guys and what does the venture capital market specifically change in terms of diligence to avoid the next FTX? Because my perception, and this is not unique to venture
Right.
or crypto specifically,
Right.
I think it's specific. Like if we look at FTX, for example, I think venture goes through hype cycles of companies that are the next big deal because Sequoia is in or so whatever blue chip VC is in. You guys don't want to miss out on a deal, and therefore you're lighter on diligence, et cetera.
Right.
So to me, it's always a question of like, how do you weed out the sociopaths? So that's a better way to put it. And is there anything specific that you can or thought about?
Well, I think, look, I think you're right. It's not a crypto only phenomenon. It's, you have this where things get hot, right? It happens in every market, right? A sector gets hot, and if you want to get into the deal, if you want to get into the fund, you kind of have to move more quickly than you would prefer, right? So the good news is we have been there since there was one, you know, we basically pitched a tent at a crossroads when there was just dirt, right? Now there's a whole city that's kind of grown up around us. So we've seen everything as we've gone along. We never invested in any of the FTX rounds. You know, simple as like, we kind of like to have a board seat when we're a big investor in something. Well, there's no board to join. Okay, that makes it difficult for us to have a board seat. You know, this is not the most complicated stuff in the world, but at the end of the day, we're always going to have to kind of measure, you know, part of what we have is we have pattern recognition that a lot of people that have been at it not as long won't necessarily have. So if the world gets kind of crazy, we probably are a little better at differentiating when it's like that. But the good news about what we'll probably see for the next 2 or 3 years while things are sort of settled down is the frenzy's gone. So I think just that in itself should allow people
Is
to take more
there
care.
methodology to judging the character of a founder? Is it all just?
No, we do
gut-
a lot of.
Is it gut feel? Or
No, we do a lot of.
You gotta get your own psychologist on.
We do a lot of diligence on founders. And look, one of the things that personally I'm always, you know, sort of, you know, suspicious of is when somebody's apparently proven themselves to be smarter than everybody else. Like that just doesn't really happen. So when that's the word on somebody, that's probably wrong.
Okay, here's my last follow-up question. So my thought or my theory is that there might be founders who are not necessarily sociopaths, but because the hype cycle is so great, they sort of drink their own Kool-Aid that has been.
It drives you to sociopathic.
Yeah, that has been fed to them largely by the people that are around them, not the investors. So do you agree that there is something about the hype cycle that creates Stan Bankman-Fried?
Well, I think,
or it's a nature versus nurture question.
yeah, no, I think, you know, look, we've seen, you know, I mean, John Corzine basically did what Sam Bankman-Fried did, right? And John Corzine was a senator and the head of Goldman Sachs.
Also
So,
But I mean, he was a sociopath too.
yeah, but I'm saying
I
like,
mean,
so like,
everybody knew that.
like sort of like trying to predict who's going to be a thief. You know, I'm not sure that anybody has it. I mean, I think that there were much more simple. I think that that it's kind of amazing to me that when this event happened, like somehow crypto was the culprit. Crypto had nothing to do with it. It was the investors who were the culprit. I mean, I think that they literally aided and abetted a scheme to basically rip off retail. And there should be class action lawyers all over the place for the retail that lost their money, going after the people who basically made it possible for these guys to advertise and lure them in.
I have a question about
they
the
didn't
fund.
exercise.
So is the fund going to be specifically dedicated to Web 3.0, or is it going to be dedicated to all
So we're fairly
implementations of blockchain?
So
or-
we're fairly agnostic, and we really do go across everything. So we look at you know, layer ones. We look at everything in the infrastructure. We look at service providers. We look at, you know, gaming marketplaces, NFTs. We're one of the
Multiverse.
things. the multiverse. I love, the metaverse. The metaverse is not to be underestimated, folks. And again, one of the things we're working on is this. I'm working on a presentation which is sort of like this is the evolution revolution. Okay, nothing that's happening here is really new. Okay, like my little analogy about movies and NFTs. Right. At the end of the day, the metaverse has been with us for like 25 years. The metaverse is not just a pair of goggles and total immersion. If you don't think that Call of Duty or Fortnite isn't the metaverse, right? If you don't think that going to see Avatar in a movie theater, you're not in the metaverse. There's literally nothing you're looking at in Avatar that's actually there, right? It's kind of amazing. So, all of these things are just kind of all developing. And, like when you think about, let's just think about sports for a second. If you look at like in Spanish sports, you have like Barcelona, Real Madrid, right? Both of these teams have 1 billion fans around the world. 1 billion people would say, I care about what happens to them. Now, 20 years ago, if anybody cared about Barcelona and Real Madrid and they were not in Spain, they would literally get nothing, right? If they were in Spain, it might be on local TV once in a while. And if they're really lucky, they're either in Madrid or Barcelona and they could actually go to the game, right? So now the internet allows, and streaming allows basically their billion fans to now actually sort of experience the game as a viewer. That's a big step. But what the metaverse will do will let the billion fans go. And that's crazy, right? 1 billion people will be able to go. And that's a bigger leap than actually that they can watch it. So,
Yeah, it's interesting.
So like that, these are major
Any other
changes.
questions?
Yeah.
Let's ask one. So you were kind of asked this already, but I just wanted to see if you could give a little more depth to it.
Sure.
Just so how in with some of the things that you guys love, but maybe you're a little worried about, do you overlay some of your governance? Like, hey guys, maybe you should have a board. Like, hey guys, I want to report back to me and I want to see the bank account every month and I want to be attached.
We both invest in traditional companies where we expect them to look traditional.
Right.
And we also invest in projects where the governance is unusual. Now, one of the things about our level of experience is, to understand these tokenized environments, you have to participate in them over time, right? And they're tricky. And one of the things that we do is we try not to be too large because we don't want to dominate them. Because basically, when you're going to try to sort of have the community kind of take something and take care of it, if they don't feel empowered, if they don't feel like they matter, then that doesn't work. And the whole thing kind of loses its energy. So we have to kind of try to stay small. We have to try to encourage. And one of the things that actually we work with our founders on a lot is how to build a vibrant community and have us not be sort of the 800-pound gorilla.
What's the most successful tokenized community so far?
Well, I mean, Ethereum, obviously, but if you look
I
at
was thinking about community in terms of like social or things like that. I guess Ethereum is a coin that was people use and
when you
issued.
I don't know, there's so many different ways to measure most successful. I mean, that whole like 8-coin phenomenon is pretty interesting. But at the end of the day, there's this sort of mystery around decentralization. But in theory, you don't need a blockchain to decentralize, right? A company that's traditionally organized could say, you know what, we've decided that because everybody now has a smartphone, we're going to just once a week have a shareholders meeting and vote on a bunch of stuff, right?
You call that decentralized?
Well, that would be decentralized if you actually started to have the community make more of the decisions.
Well, you can say Apple is decentralized because it's owned by millions of people. I mean, it's
No, but they don't control it. They don't control it. They have no say
so is a
whatsoever.
government. I mean, I think this is a fascinating topic
Yeah.
to think about. But is a government decentralized because people vote? I mean,
Well,
is
no,
a democracy by definition
The government,
decentralized?
the first experiment in decentralization in the history of the world was the United States, right? And what they decided actually in 1776, they went too far because under the Articles of Confederation, there was no centralized authority and like things literally didn't work. So then the Constitution of 1789 is basically a compromise to sort of create a stronger
Because you have,
central
there you have
authority.
the states, but the
So
mere voting.
There's always
on
going to
something
be
is not
there's
really
always going to
decentralized.
be
But it's
no, but authority is authority.
Fantastic.
Yeah.
Susan, did you have a question?
No.
You raised your hand a while back?
Yeah.
No? Anybody else have any
I might
questions?
have been like.
Joe, I think you're involved in crypto in a big way. Any questions for Pantera?
Yeah, we can talk offline.
Okay.
We'll talk about it offline. Well, listen, guys, fantastic. Great job. Thanks so much.